What's up everyone, and welcome to another Bitcoin market update. In these videos you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. So let's get into it here with Bitcoin on the monthly time frame. I apologize for the police sirens. The window is open because it is absolutely beautiful weather over here in Scotland today. So we're looking over here at Bitcoin on the monthly time frame. You can see we have this pretty bearish candlestick right here. We're really concerned with the monthly candle close, which is in 4 days and 12 hours. Really what we're looking at is the bottom wick on this candle. If the wick of this candle is very long, that means people are buying the dip. And that's very good for the price action to continue to go up after we have a short-term bounce here on lower-term time frames. So if the wick is short though, say we close somewhere down here in like the, below 35K range, let's say, this is going to be, obviously we already have the increasing bear volume here. If that's coupled with a shorter, lower wick, we could see a push down even further into like the $20,000, like in the 20s range. Before we come up and form a higher low. Now, because of the magnitude of the increase in price, the size of this move was about 573% from our September low down here at about $9,800. So, what that tells us is we would have to draw down a very significant amount for us to then look at that and go, okay, we're going to honestly, just go to zero at that point, because, you have to look at the magnitude of the move and factor that into if you think we're going to set a higher low or not. On this rise in price, we've risen a significant amount, so for us to set a higher low is very likely. It's either where we just set it, potentially right here, or somewhere lower than that point. And where would that other point be if we were to go lower on the monthly time frame? I would argue that it's this light blue zone down here from our December 2020 low at about 17,555. So this is our other high time frame support zone, starts at about 1900, 500, and this is from when we had the bull trend right here. And you can see that since that point we continued the bull trend up until we got to, this point right here where we stopped making higher lows and higher highs, and we made a lower low for the first time in this bull run. And subsequently we came up, formed a lower high, and then came down and formed a lower low. So that's very significant. So now we're currently bouncing off of this light blue zone right here. Now this light blue zone right here is our support zone from back here on January 18th. Now what we could end up seeing is us come up, form a lower high somewhere below this one up here, and then when we set that lower high, we now are going to come back down. And now when we come back down, this is the critical moment where the bulls need to show strength. For us to continue the bull run, we need to see a higher low here in comparison to this one, and then a higher high to now change the trend back to the bull's favor and have the momentum on the high time frame like the weekly. If we do not, sorry, give me 1 second, I'm going to close the window. If we do not form that higher low on the weekly time frame and we form a lower low, we'll likely form a lower low and go down to this level down here, because there's going to be some liquidations below these lows. So that's something to keep an eye on. If we go to the lower term time frames now, let's go to like the 3-day. If we look at the 3-day time frame, we have these long lower wicks of people buying the dip, and then we have this 3-day candle which closes in 11 hours. Now right now we have decreasing bull volume, which is not good for continuation's sake for the bulls. So in 11 hours, we want this volume candle to surpass this previous volume candle. It's going to have to take a pretty significant amount of volume to do that, but it is possible. And if we do see that, then we could see a further move up higher into potentially this resistance zone up here, which is our first daily resistance zone. And this starts up here from this gray zone, which is this 3-day candle right here, when we had our bull pattern. And so this is the main resistance zone that I would like to go short on if we go and get up to this zone with stop loss above, and then target the light blue zone at a minimum with a risk reward ratio of about 2. So this would also be confluent with this head and shoulders pattern up here, where we would be retesting the neckline before a push down. Now patterns like this that play out like this, that are very clean, like this one, you can see this is literally almost as clean as this gets. When you retest that neckline, it's usually a very rapid decline thereafter. And so if this trade is to pan out, it'll go very quickly, I would imagine. So that's something to keep an eye on as well. Those levels are right over here in pink. That's going to be where I'm looking to enter if we end up getting up to that level. If we look at the daily time frame, the daily time frame is trying to change the trend back to the bull's favor. So we came down, we formed a low here, we came up, we formed a high yesterday, and now we're trying to form a higher low. You can see that based on this longer lower wick, and currently we're above the open for this daily candle. If we do that on the daily time frame, that's going to be very good for the lower term time frames for us to start creating some support levels. For instance, this black candle will end up being a support level if we come up in the next few 12-hour candles and close above this key high right here. So what are the zones that we're looking at right now in terms of these colored areas? This dark blue zone right here is our daily support zone, which we have really just kind of been messing around with for a while here, and we haven't really used it as support very much. I mean, we did a little bit here, like we bounced a little bit and then we came down, and now we're kind of bouncing again, but we haven't had much in terms of a reaction to that level. We also have this yellow zone right here. Now this yellow zone right here is actually on the 4-hour time frame. And this is our resistance zone from back here on this white candle where we had this bear pattern. So as soon as we come into this zone, we reject off it once, we come into it again, reject off it second time, come into it a third time, reject off of it, and now we're testing this a 4th time. Every time we test this level, it's getting weaker. So every time that this level is getting touched and we push down off of it like this is what we call a rejection right here. So we pushed into it, the price moves into this level, and then the price goes down and forms a high inside of this level, and then goes down to try and form another low, comes up, forms another high into it, comes down. So that's a rejection. So every time you can count these, if we take our tool right here and we take our little arrow, we can say that's 1, copy it. It's always a pain in the ass to move these things. Here's 2. TradingView needs to fix this. This is absolute garbage. It's like hard to grab it. And then here's the 4th. So you can see every test of this. This is 4 tests. So every time we test this, it's getting weaker. Now, what are we even bouncing off of down here? Honestly, what is our support level here? Well, we have one support level, and it's this candle right here. So if we grab our magnet tool and our rectangle tool, we can pull this across, and we can see that this is our main support level for price. This is the only support level for price. So besides that light blue zone, this is like on the lower term time frames, this is the level. So you can see that this level has worked once, twice, and now 3 times. So both of these levels are getting weaker. One of these levels is going to break. It's either going to be this gray zone or this yellow zone. So really, those are the only two levels that I'm keeping an eye on. If we go above the yellow zone and we close 2 candles above it, that's bullish. If we go below the gray zone and close 2 candles below it, that's bearish. That's really all I'm looking at right now. The only other thing I'm looking at is this edge-to-edge trade on Bitcoin right now, which I actually might take. And this edge-to-edge trade is on the Ichimoku cloud indicator with doubled settings. Now you can see when the cloud is like this, where it's very large, you have a very good risk-reward opportunity, because there's a lot of profit potential moving up to the top of this cloud, which is up here at about 44,400. So the way you can play this is use your long position tool. You can say, all right, I'm going to enter right now because we got a candle close inside of this. If we look at the chart closely enough, I know it's hard to kind of see, but if we look at the cloud, you can see that the only candle close that we got inside of it was right here. We rejected off of it here. We went inside of it, but we didn't close inside of it. We rejected off of it. Now we close inside of it. That is significant. So now the way that you can play this, the way that I'm considering playing this, is entering right now with my stop loss below the cloud. So my stop loss it's not actually on the books. My stop loss is going to only come into play. I'll close it out with a market order if we get a candle close outside of the cloud again. So if we don't get a candle close outside of the cloud, I'm just long right now, and I'm targeting this high. So the way that this would look, if we're assuming that this is the candle we're going long on, the cloud is, pretty nearby. And, if we're looking at it's right here. So let's say that we're waiting for a candle close outside of it. Where do we think that candle close would be? Let's say it's like, I don't know, right here by the Tenkan, let's say. Even if it's right there, if we pull this up to the top here, this is a risk reward of about 4.09. So this is a very significant risk reward ratio. This is something you can't really ignore if you're a cloud trader. And so when the price gets inside of a cloud like this, let's actually look at an example of this. Let me see if I can find the example of this from the weekly time frame. I believe, yes, here's an example. Okay. So it's kind of hard to tell. I mean, I have a bunch of nonsense going on over here. I was trying to look at some different patterns going on here. I'm just going to take these off so it's not distracting. So if we look at the edge to edge here, once we got the candle closes inside of the cloud, you can see that the price action rode the bottom edge of the cloud, which is this green line here. You can see the cloud doesn't move over because of the time frame. But if we look at this, let me see if the other one does. Something like Bitstamp. This one definitely does. Yes. Here we go. This is what we need. All right. So if we look at Bitstamp here, once price moved into the cloud, there's a couple different things that happen. The first time, it was a fake out. We'd close inside, close back outside. Now once we close inside here, this was the entry point, with the top of the cloud being the profit potential, right? We rode the bottom edge of the cloud, but we didn't close below it. We wicked out of it for like 4 weeks in a row, and then we came up and we had the actual edge-to-edge move right here. This was the exit right here at 11,400. So the way that this trade worked was you would enter on the close of this candle right here. So we're going to move this over just so it's easier to see. Holy hell. What is happening? That was crazy. So, and then the close is going to be somewhere, outside of the cloud. So it's going to be somewhere around here. And then the profit potential, which is, not that massive, but still good, is the top of the cloud, which is right about here. So this is still, it's about a risk-reward ratio of 2, depending on where you're going to put your stop loss depending on the candle close. It would have been right around here, so it actually would have moved up a little bit to somewhere around there. Somewhere roughly around there. The thing is, you don't have your stop loss on the books. The way that this trade works is you close the trade once you get a candle close outside of the cloud. Like this, for instance, would have been edge to edge here. You would have entered right here, and you would have got stopped out right here because the next candle closed outside of the cloud. So it's wherever the candle closes is really where you're getting stopped out. So you need to take that into consideration because it moves your stop loss and can change the risk reward. But that's an example of an edge-to-edge trade. And so when we're looking at Bitcoin now on the 4-hour, this is what we're seeing. We're seeing the potential for an edge-to-edge here with the candle close inside of the cloud. Now, what I watch for when I see this is exactly what we just saw here, which is a fake out initially. So we close inside once, then we close back outside. Then we close back inside of it for real. And once we do that, that's the entry. And then you wait for, in this case, this was a weekly time frame, so it took a long time to play out. But this is the 4-hour time frame, so this is going to play out over the next few days if this trade ends up panning out. So we'll see what it ends up doing. It's still running into this yellow resistance. So, if we see something like, for instance, and I apologize, we'll be finished right after this. If we go through this zone and close 2 candles above this zone, then on a retest of this, this will be support, and then you can target the top of this zone as well. So that might even be a potential trade there with stop loss below. Let's see what the risk reward is for that. About 1.68. It's not amazing, but it is what it is. So that's what we're currently dealing with on Bitcoin right now. I hope this video was helpful for you. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we released on Leutheria.com. This is where you can learn all of the fundamental elements that you need, such as volume analysis, trend analysis, candlestick analysis, and many other things to build that foundation of understanding that you need to get started generating consistent profits trading cryptocurrencies like Bitcoin and others. And also, you will be able to get 20% off that course up through the end of this month. So go check that out. We have the link in the description below. And until tomorrow, onward and upward.